Good morning. Welcome to the Compliance Quarterly webinar. We'll let additional folks join us from the waiting room. Okay, looks like attendees are slowing down a little bit, so we'll go ahead and get started. Good morning. Welcome to the Colorado Department of Labor and Employment's Compliance Quarterly webinar series. This is the 5th edition of our webinar series where we bring to you news and information and updates from our regulatory divisions at CDLE. We have a robust agenda for you this morning. Before we get into the agenda, we'll just touch on a few housekeeping items. I'm Cher Hoven, Deputy Executive Director for the Department of Labor and Employment, and joining me today are members of our division leadership and some of our subject matter experts in those divisions here to update you on what's going on from a regulatory and rulemaking perspective, technology updates, and opportunities for you as our employer partners and business community in the state to engage with us. Housekeeping wise, please don't forget to use the Q&A function for questions. If you are joining us via YouTube live stream, please use the comment section at the end of the content. We will try and get to as many questions as possible, and a recording of today's webinar will be available on our website at cdle.colorado.gov. And with that, let's go ahead and look at today's agenda. Okay, so I assume most of our employer and business partners in the state are familiar with our primary regulatory divisions at CDLE, which are paid family leave, UI, and workers' comp. Division of Oil and Public Safety, unless you are a member of the regulated community within a few specific industries, you may not have to interact with them, but we'll hear from them. And of course, wage and hour labor law are housed within our Division of Labor Standards and Statistics. So these are the divisions we'll hear from today. Probably most employers in the state by now are familiar with family in the state of Colorado. This is a voter-approved program that directed the department to stand up a paid leave program in the state. Employers, depending on their size, must either secure a private plan or participate in the state plan. Local governments may opt out. And this provides wage replacement for workers who are in need of some sort of family leave due to one's own condition or to care of another individual. So we'll hear from those folks today. Division of Unemployment Insurance, you're likely very familiar with that division as well. This is also a program that provides partial wage replacement to Colorado workers. And from our employers, we ask of you a couple of things every quarter: wage reports and premium payments for your covered workforce. Workers' compensation. This division does not pay workers' comp, rather oversees the efficient administration of the workers' comp system. We'll hear from them. Division of Oil and Public Safety. Again, this is a consumer protection and public safety arm of the department that oversees regulatory functions for a variety of industries, which include elevators, escalators, boilers, explosives, amusement park rides, and all under the guise of ensuring public safety and consumer protection. And then Division of Labor Standards and Statistics. So this covers a whole host of wage and hour and labor law regulatory initiatives that include minimum wage, overtime, and are really valid. The work that they're doing is important to our employer community because one of the tasks of DLSS is not to just ensure that folks are getting the wages that they earned, but the division is really focused on ensuring that employers have an opportunity to engage with them, and they're committed to compliance assistance through outreach and education, and they have a lot of content to share with us today as well. So with that, I will turn it over to my colleague in the family division, and then again at the end, we will go to your questions if you could utilize the Q&A function for that. So with that, my colleague David.
Right, thank you for that introduction. I am here from the Division of Family and Medical Leave Insurance, as we affectionately call it, family. Everything you need to know for this quarter. I want to start with the employer portal URL. This is going to change effective in 2 days, February 21st. So the URL that you have for the employer portal right now is not going to work after Saturday. So you want to update any saved bookmarks you have to make sure that you can still get to the portal, to all the information you need. That will also change on our main page, so you will be able to get there. We're not changing anything about the system on Saturday. This is strictly a transition of the URL. We do have some deadlines coming up. Employee headcount. All employers in Colorado have to submit their 2026 annual total employee headcount on that portal, again, with the new address. Uh, Technically, the deadline's February 28th. That's a Saturday. When a deadline falls on a Saturday, Sunday, or legal holiday, it moves to the next business day that is neither a Saturday, Sunday, nor legal holiday. So that'll actually be due on March 1st. But you do want to let us know how many employees you have. If you've got that 9 or fewer, or 10 or more. If we don't hear from you, we assume you've got 10 or more, and that means you will pay the full premium rate. Now, you can't appeal that, but that's a process. It's a hassle. It's much easier to log into our system some point in the next week and just answer that question for us. Let us know. Make sure that we're charging the correct premium rate. Private plan amendments. We've got some reports due. Quarter 4 2025 private plan reports. Those were actually due January 31st. Amendments are accepted through March 1st. Again, deadline bumps to the Monday. Reporting is required for both self-insured employers and private plan carriers. You've got to follow the required subject line and file naming conventions as described on the website. Should be emailed to the address listed on the slide. So you got to follow all of those rules to make sure that we can process the data appropriately and quickly. We do have people who rely on that data, and we have to report it out to the legislature as well. So please do make sure to get that in. And do please note once again, dates that fall on weekends are going to bounce back to that next business day. Premium overpayment certification is coming up here as well. For those individuals who had paid premiums prior to the start of the program, this was back in 2023, but then obtained private plans before the program started. All of those employers are entitled to refunds of their premiums. We have been trying to give you your money for years. We've been reaching out, we've been trying to contact many of these employers. What we ended up doing at the end of last year was saying, you know what, we're just going to send you your money. So we issued those refunds. Now, what that means, though, is you may have received some money that needed to be returned to your employees. So you need to certify that you've done that. And if you don't return that certification, we may be sending some auditors out to check and make sure that you did give that money back to the employees the way you were supposed to. Also, if you don't cash those checks, they go back to the Treasury. So that's our first slide here, some things popping up this quarter. We move on to the next slide, talk a little bit about some things that coming up in terms of rulemaking and in our technical world. In December, we did roll out Release 18. So this was a pretty substantial back-end update for the employer portal. Big focus was on tightening security. We've had a big spike in attempted fraudulent employer accounts. That may sound weird, people setting up fake employers to come in and pay us premiums. But once they do that, then they set up their fake employees and then they claim the benefits. It's something that a lot of the agencies here at CDLE and around the country deal with. So we've been increasing our security to do that. We've expanded some self-service access. One of the big things here was around FICA documentation. I want to take a moment to discuss that. If you recall, early last year, January of 2025, the IRS issued some guidance saying that employers were going to have to pay FICA taxes on some family benefits starting January 1st of 2026. Right around December 20th of last year, so just before the end of the year, the IRS came out and said, never mind on that. So we'd already built the system to provide this information, but that deadline has been delayed. until January 1st of 2027. That was the federal IRS. We try not to do that kind of whiplash maneuver for our stakeholders. But so our system does now allow you to have some self-service access to the FICA documentation, but the tax reasons for that access aren't actually going to apply until January of next year. But what we are trying to do here for our employers is make it easier for you to access the information you need without needing to contact support. So better security, improving transparency, and making the employer experience smoother. We are going to have a rulemaking hearing on March 17th. This is going to be a relatively small rulemaking. We try to keep our spring rulemaking agenda pretty brief because we coincide with the legislature there, but there are some things we need to get done. We also did have a rule hearing yesterday that was just on that tax issue. We had changed our rules. They went into effect on January 1st to reflect the federal tax guidelines. We had to back that out and delay those rules from going into effect. So that was a very small change, one of the fastest rule hearings we've ever had here at Family. But we also have been working on some other tech updates. Portal areas that employers interact with the most. We've cut bulk payment processing from 20 hours down to 5. Wage uploads used to take half an hour. We can now do that in about 4 minutes. Premium calculations that used to take 6 hours now take just 13 minutes. So speeding everything up, hopefully making your days a little bit easier, definitely makes our day a little bit easier as well. One last slide for me before I hand it over to my colleagues from other divisions. Just identifying a couple of resources that we have. Family does try to give you everything you need so that you can self-serve. And in that area on our website, we do have specifications and templates for wage reporting, user guides, how-to videos, various tools to help you communicate with staff and give notices, all of our newly adopted rules, proposed rules, supplemental guidance. Best way to stay up to date each month on Family is through our Family Business newsletter, and you can subscribe to that on our website as well. What we do try to offer you all the tools that you need to self-serve. If you ever do run into any issues, please don't hesitate to call a customer service unit. I'm a huge fan. They do great work, and they will most likely be able to help you resolve your problem pretty quickly and easily. And if they can't, they know who can and will get you in touch. So that's it from Family for today. If you do have any questions, please feel free to drop it in that Q&A. I have Evan Grimes and Lindsay Behringer here as well from the Family Division, who are both way smarter than I am, who will answer your questions. And with that, I will hand it over to Megan Culp from the Division of Unemployment Insurance.
Thank you, David. Good morning, everyone. As David mentioned, my name is Megan Culp. I am the branch manager for our employer services side of unemployment insurance. Thank you all for being here this morning. A few updates for us regarding unemployment insurance program changes. For employers that opt to pay what we call a voluntary premium payment, these are coming up due on Monday, March 16th. So these are the payments that employers make when they would like to reduce their rate by essentially paying it down. These are not payments that go towards any future premiums. They can't be refunded, and further, they also cannot be accepted if you have a balance owed on your account. So if you have any interest in learning more about this, we do have a link here in the slide deck that you'll get at the end of the presentation to get more information. Electronic communication requirements. This is just a friendly reminder. Employers and TPAs are required by Colorado reg and law to receive and respond to URI requests electronically. This can be achieved through our MyUI Employer Plus portal or the State Information Data Exchange System, or SIDES. This is a third-party managed site that is typically used for Colorado, at least, for fact-finding responses. You may work with a TPA that uses this, or you yourself may have registration directly. As a note here, accounts missing an electronic point of contact, so typically email or somebody that administers your account electronically, may miss important UI communications. So this can include things like fact-finding, benefit charging statements, your quarterly statements of amounts owed to the division, and then also your annual rates. So these are important pieces of information. And with that, you may be subject to additional charges or loss of protest rights. So this is where if you don't respond to fact finding, and there's a pattern of that behavior as an employer, you may not be able to appeal any future charges that come through. So the action required from you all here is that you visit the electronic communications requirements page on our website. You can find more information about how to maintain your electronic communications preferences and information there. Next slide. And then of note here, Q1 2026 employer charging correspondence schedule change. These are your quarterly statements that tell you how many unemployment charges were put onto your unemployment insurance account in the prior quarter. So typically these bills would have been mailed around the 25th of the month following the end of the quarter. We have had a schedule change on this. So you will now see these reimbursable statements in your MyUI Employer Plus portal, starting on April 5th as an example of this upcoming quarter, but typically the 5th of the month of the month following the end of the prior quarter. So, and then payments remain due 30 days after the mail date. So please pay attention to that as well. Next slide. Oop, one back, sorry. Thank you. And then for tech updates, as a reminder, this is something that occurred last year, but we did discontinue our employer reporting units. These were historically known as distribution points. As of Q1 of 25, this went into effect. But what we are now doing and want to bring your attention to is that any wage reports that have continued to be filed utilizing those reporting units will no longer be accepted. So it's important that if you work with a third-party administrator, you communicate this to them. We're also communicating this to them. But if any records submitted with that UI number with the reporting unit will be rejected. So contributory employers, these are your employers that have the rates that pay the premiums quarterly. Please submit all of those wage reports and premium payments to the division under your primary account number. So that's your typical UI account number that you operate. And then for reimbursable employers, we did create individual accounts for those prior unit numbers. So please continue to submit wages, pay premiums, and then respond to any benefit communication under those new account numbers that were established for those reporting units. And then a note on the delinquent premium penalties. These are penalties that are applied to your 2026 account, broken down into 4-quarter installments, account balance rather. And these amounts due will now display on the employer homepage. And the notice of amount due, which is your monthly statement, will now show the amount due for the current quarter and will be updated quarterly. So instead of kind of seeing that bulk amount, you're going to see the individual quarter installments there. And then a note there at the bottom to please submit a contact us if you have any additional requests, or call us at our customer service line. As David said, our customer service agents are also fantastic and incredibly knowledgeable and there to help you. And then our division resources are here as well. We have some fantastic resources, especially related to our toolkits and employer guides. These are the guides that will help you navigate the system, especially if you have some of those annual needs that are more uncommon, such as your annual seasonal report, which is coming up due the end of this month. This is a smaller group of employers. If you need to get information, as we talked about earlier, on the delinquent premium penalty or the voluntary premium payments, all of that information is listed there. Please also make sure to keep an eye out for our monthly email updates. These go to TPAs and employers. They all have great information. And then we also have an upcoming workshop. So please keep an eye out for that March 25th date next month. And that's it for unemployment insurance. I'm going to hand it off to my colleague, Amy Kingston, with the Division of Workers' Compensation.
Thank you so much, Megan. Hi, Amy Kingston. I'm the Manager of Claims and Employer Programs with the Division of Workers' Comp. We had an exciting month for rule updates. we are in anticipation for some tech updates that we will be making this summer, revisiting rules 1, 5, 6, and 7. We've already conducted a series of pre-rule hearing stakeholder meetings, but if you wanted to give us further feedback, we are still open to it. We haven't had our official rule hearing yet, so please check out. There's a link there for red line versions of each rule. You're welcome to email us and let us know of any additional changes, whether or not they're related to the red lines. Maybe you think some section that we hadn't been touched yet needs an update. Also, we have a series of rule changes this year that we anticipate, including Rule 16, 18, and our self-insurance rules. If you want more information on that, or if you'd like to participate in rule hearings as they come up, please sign up for our rule hearing email list. We promise not to spam you and just let you know when there's an upcoming rule hearing. Next up is our tech update. So as I said, we are updating these rules because we're having a tech update. Half of it is occurring this summer, the summer of 2026, and the other half is the summer of 2027. It is a massive update, including how, for this summer, we are looking at how insurance carriers will be providing the division information about claims. And then in 2027, full access. If you are an employer, an injured worker, an attorney, an insurance carrier, and you want to see what we have, you will be able to do that. It is very exciting. We will also be sending out information on training for our new program and also demos for our stakeholders to look at and give us feedback. Is this what you want to see? Do you understand how the system works? So please sign up for a different newsletter if you want more information as we go forward with that. I do have some resources and toolkits. For any employer that is interested, we do have a premium cost containment program. This is an opportunity for employers who have a safety program to receive a deduction on their workers' compensation premium costs. You can save up to 10%. If you don't have a safety program, but you're interested in how do you get one, we will also help you with that. Safety programs mean less injuries. Less injuries mean less work comp claims. So it is a win-win for everyone, and you receive some money off. If you also need any personalized training, this typically comes from insurance carriers, maybe new adjusters or employers who don't understand how the system works yet. Please reach out to us. We give personalized training whenever requested. And last but not least, we have some upcoming engagement opportunities. We have a conference every other year in Colorado Springs. This year, it is on March 9th through the 11th. And we will be exploring the theme of the next frontier. We have an exciting array of speakers to talk about workers' compensation. Also, we have some other agencies that are here today to talk about what they do and how it interacts with workers' comp. We also have monthly training opportunities, whether it's case law updates or how claims management works. We have that on our website. And of course, once again, a different email address that you can sign up for and get just information on that. But please check us out. We are here to help, and we are very interested in getting your feedback. So that, I believe, is it from workers' comp. So I'm going to pass it back to Cher to talk about the Division of Oil and Public Safety.
Thank you, Amy. Okay, a quick update from our Division of Oil and Public Safety. As I mentioned at the top of the webinar, their regulatory authority includes a variety of industries. That does include petroleum storage tanks. So current state, the division regulates about 3,000 retailers in Colorado, and those are gas station retailers. And so our division reviews for fuel accuracy and quality at the pump. Last year, a bill was passed that extends that regulatory authority into EV charging stations. So similar to fuel quality and accuracy, now the division will be overseeing the accuracy when an individual is accessing a public EV charging station and providing a mechanism with which a consumer can complain should they believe that they are not getting the quality charging that they're receiving at an EV charging station. So the rulemaking for this newly adopted regulatory authority will commence this year in March. Any industry that is impacted by this rule is encouraged to contact our division points of contact included in the slide here. And from the division does publish quarterly a variety of bulletins for the regulated community. Each bulletin is specific to that regulated community, which includes petroleum, amusement rides and devices, boilers, the conveyance program, and explosives. And all of those bulletins can be found on the division's homepage. In addition, there's a guidance document for the regulated industry that outlines and notifies what owners need to know to maintain compliance with the division. And now I will turn it over to Eric in our Division of Labor Standards and Statistics. I think I will.
Well, I will restart. Thanks, Cher. I appreciate it. My name is Eric Yohe, and I am a program manager in the Division of Labor Standards and Statistics. From labor standards, we primarily do wage and hour law. I'm sure a lot of you know that. We don't have a lot of new information in terms of regulations and deadlines for this presentation today. We probably will later in the year. But I do want to note that over the last several months, we have been working on our guidance materials and posting them on our website. We have recorded several new educational videos about Colorado labor laws, and we have published and we continue to publish labor law guidance that includes public notice reports and other releases from DLSS. In fact, we will probably see a few press releases coming from our division later in the year. But the main thing I wanted to talk about now is if you have any questions, whether it's about any part of what we do, wages, deductions, anything we do, you can go to coloradolaborlaw.gov and I know this is a short one, but I just had the short slides, so I think I can pass it back.
Thank you, Eric. Okay, boy, the team is super efficient today getting through the questions. I'm going to turn it over to Jessica if you would like to help to moderate some of the questions coming into the Q&A.
Sure. Thank you, Cher. We've got a couple new questions coming in, so please feel free to type yours into the Q&A and we'll get to as many as we can. I have a question here from Kelly. I believe this is for Eric. Will we provide guidance on rest periods and if restroom breaks, water breaks, time spent on the phone count towards that time?
Yeah, we do have that information. We have guidance on rest periods in what are called our infos on our website. There's quite a bit of information that can be provided about rest periods. If you have specific questions, you can also go to our website and get our email address or get the information for our call center, and you can talk to us directly with any questions you have about rest periods.
Thank you, Eric. I am going to toss this next one to Megan Culp in the Unemployment Insurance Division. The question is, what is eSides and must I enroll?
Thanks, Jessica. Yeah, eSides is a service that we partner with a national workforce agency partner that manages this. It's the State Data Exchange, and essentially it allows us to partner with you to receive fact-finding responses. So it's just an option available to you as an employer to use to communicate with us electronically. If typically, we see larger employers or third-party administrators using that portal. Individual employers are welcome to use it as well. We can provide that information to you with a link, I believe, here in the chat, if you're interested in registering with eSides. However, MyUI Employer Plus is a fully acceptable option as well. So you have options there. eSides is just one of them.
Thanks, Megan. I'm going to toss this next question to David over in the family division. And if need be, I'm going to call on Lindsay to answer this if David, you don't know the answer. The question is from Katrina, if the employer has a private plan, do they still need to report headcount on the website? If so, how?
I actually will pass that one over to Lindsay because I think I know the answer, but I also have a little alarm going off in my head that we might have recently changed those rules. So Lindsay, do you have a good answer for that?
We do. We do require employers on a private plan to report their headcount to us annually. They can do that via a task that is assigned to them in My Family Plus Employer. It's a quick task, shouldn't take you more than a couple of minutes. And that is to assist us in case you choose to return to the family program. But it shouldn't take you more, like I said, more than a couple of minutes. If you don't see the task in your portal, your third-party administrator may have done it for you. Someone in your organization may have completed it. But if you don't see it, you're more than welcome to give us a call. Our call center agents are fabulous, and they will walk you through that.
Thanks, Lindsay. I have another question for the family team. Is there an option to download reports on claims in the system?
So you can access data regarding specific claims through our HR dashboard, which is part of the employer portal. Uh, you can't download bulk data about claims. That's because accessing any claim information requires a very specific certification on the reasons for accessing it. There are limited reasons why employers are permitted to access certain information about claims. Mainly, you need information in order to coordinate benefits. So sometimes you may need to know what somebody's benefits rates are, what the duration is, what the cause of leave is, but that's not information that we generally distribute. We will give that to employers in situations where there's a clear need for it. And because of that, it's very difficult for us to offer any type of a bulk download because we do need to know in each specific case that that is information that you need for a permissible reason.
Thanks, David. Another question here for you, David, for family. The question is, will you be keeping track of people who use their 12 weeks year after year?
Yeah, so this is related to a previous question regarding our fraud prevention efforts. So we do track leave usage. So we know if somebody is requesting more than they're entitled to. Individuals are generally entitled to up to 12 weeks per year. There are rare circumstances where that can be extended uh, by actually up to an additional 16 weeks in, again, very rare circumstances. We do look at trends, but we're not specifically looking for individuals who are using all of their leave. Underneath the law, that's leave that somebody's entitled to. We review that leave on a case-by-case basis. And we do look at specific indicators in individual cases to see if there's an indication that it may be fraudulent or inappropriate. But it's not something at this point that we're looking at year over year over year to track to see if people are using that leave. And just a reminder, if somebody has a chronic condition, if they're caring for a family member who has a chronic condition, they're somebody who just happens to have a lot of kids. It can be very legitimate for them to be using their full leave allotment on a year-to-year basis. It's not something that we would consider in and of itself an indicator of fraud. It could very well be an indicator, again, of a serious and chronic health condition, which is what family's here for.
Thank you, David. We've gotten through all of our open questions. Our team here is very efficient in answering all of the questions. We can revisit topics while everyone thinks of new questions, or we can give you back some time. Let's see here. Let's see if we can get a new topic from. Lots of family questions today. David, if you wouldn't mind going over small businesses who may be considered S corps, and whether or not they should consider themselves employees because they pay ourselves through QuickBooks. So specifically, I have me and my partners. We're considered two employees because we pay ourselves through QuickBooks. I have 10 paychecks that go out every week, but only 3 of us own the business. So how do they count their employees, and should they be counting the owners?
And I actually know that Evan Grimes has been working on this issue lately. So, Evan, I'm going to turn this one over to you for a response.
Sure, no problem. I think a question like this is pretty fact intensive. So technically, the broad answer is it depends. But broadly, whenever we look at whether or not somebody is an employee versus self employed, we're looking at two things: the degree of control that that person is subject to, and the degree to which that person is conducting their own independent trade. And so, under those sort of general themes, generally, 3 partners with equal shares in a business would be considered self-employed and not employees, regardless of how they execute payments to themselves.
Thanks, Evan. We have a joint question here that I think both Amy and David, you might contribute answers to. The question is, if we have a workers' comp claim, but the deductible is most likely higher than expected, can the employee file for a family claim?
So I can jump in on the family side of that, which is that you can't receive family benefits for an absence that is due to a compensable and covered workers' compensation claim. So if a individual was hurt at work and they cannot work because of that injury, and they would be eligible under the law for temporary total disability or temporary partial disability because of that injury, they're not eligible for family benefits. That should be paid under workers' comp. And I will yield to Amy Kingston for a discussion about the deductible issue.
Yeah, thank you, David. I 100% agree with everything that David just said. As far as the deductible, I'm not 100% sure if you're referring to the deductible you have for your insurance, as opposed to, obviously, workers' compensation is outside of like your normal health insurance deductible. But any workers' compensation claim should be reported to your insurance carrier, regardless of your deductible, and handled that way.
Thank you, Amy. Evan, we have a follow-up question for you. The question is, even if owners are set up as an S corp, we are not considered employees.
Again, to speak broadly, and not give advice on a certain situation without all the facts, that could very well be the case. And that's simply because the definition of what is an employee under the Family Act that the voters enacted is different than the definition of what is an employee under IRS's tax law. So it is possible that an individual could be considered an employee under the federal tax code and could be considered not an employee under a state law such as family.
Thank you, Evan. That is all of our open questions for today. If you want to sneak in one more question, Lindsay, it looks like you have your hand up. You might want to clarify something.
I don't want to
I
clarify.
will hand it over to you.
I don't want to clarify anything. I do just want to add on to Evan's question. If you're concerned, Meg, about not being covered for family because you're not an employee under the Family Act, if you are indeed a self-employed individual under the Family Act, you have the option to opt into coverage. So that is an option that is available to you. You can opt into coverage. You can voluntarily report your wages and pay premiums. And then in the event that you need to take a family claim, you would be able to receive those benefits. So if that is something that you're interested in doing, you're absolutely able to opt into that coverage if it's of interest.
Thanks, Lindsay. With that, I'm going to hand it back over to Cher to close us out.
Okay, thanks, Jessica. Thanks, team. Got through a lot of questions and really appreciate the time that our team made for today and the time that y'all made to join us and submitted some questions. As a reminder, this is a quarterly series. The next webinar will be date to be determined in May. There's also a complimentary version of this that comes out via a newsletter the first month of the quarter, so stay tuned for that. The recording will be made available on our website. The team's pretty quick about turning these around and posting them as an additional resource for your review. So cdle.colorado.gov for that. And I think that brings this webinar to a close. So again, appreciate your time today and the questions and look forward to seeing you again.